Hey, what's up guys? Welcome to Real Estate Insights with Jim Tay. Today I'll be talking about a hot topic in the market right now, refinancing. And here's why. Check out the chart. SIBOR, which is a common peg for mortgage loans, is now at 0.25%. For some context, the lowest it was previously was in August 2011 when it was at 0.19%. Due to the current situation worldwide with COVID-19, interest rate has been falling like a falling knife. It's common to see ads like this all over the place promoting the best mortgage deals in town. The question is, it can be quite confusing looking just at the rates. Which should you go for? Which ad should you click to learn more on? Should you even be refinancing in the first place? My name is Jim Tay, and you may already know that I'm a property consultant in Singapore. But what you may not know is that I am also a Singapore accredited mortgage planner, which means that in addition to transacting and working on my clients' real estate properties, I also advise them on their mortgage planning. So in this video, I'll be sharing with you why you should refinance. I'll be telling you some disadvantages of refinancing. What? There's disadvantages? Also would be telling you what you should be looking out for besides just the surface interest rates. Also why you may want to work with a professional for your next loan. Kicking off, why should you refinance? Number one, the first reason is of course to take advantage of the lower interest rates. Previously, if you had signed your loan about 2 to 3 years ago and you are now out of the lock-in period, you might be paying interest rates as high as 2%, or if you're on the HDB loan, about 2.6%. If you refinance now to these new rates that are about between as low as 1.1 to perhaps 1.3%, you could have a ton of savings in interest expenses. To illustrate, for a rate difference of just 1%, for every $100,000 of loan, you are saving $1,000 every year. Another reason why people refinance is to stretch the tenure of the loan. That in turn reduces your mortgage repayments. If you are taking a new loan, there is a requirement that you only can loan up to 30 years if your loan to value is 75%. However, when you refinance, you are able to bypass this restriction by stretching your loan tenure beyond 30 years and at the same time retaining your loan to value. This reduces your mortgage repayments. Now to the downsides. What financial institutions don't usually tell you, it's in the fine print, that when you refinance, they often entice you to refinance with them to leave your existing mortgage bank by providing you cash incentives or rebates. These rebates, however, usually come with a clawback period for 3 years. That means that for your refinance loan, even after you may be past the initial lock-in period of 2 years, you still have that third year where if you choose to refinance again to another bank, the bank that you refinance with has the right to claw back that initial rebates or incentive that were given to you. The second disadvantage is when you refinance your loan, or in fact when you extend the loan tenure, you are paying your mortgage payments over a longer period of time, which in turn can possibly increase your lifetime expenses paid towards the bank. Why is that so? Because whenever you refinance your loan with the bank, you are restarting your loan tenure. And if you look at this chart, which is the amortization table of the loan amount, you can see clearly that for this example, a 500k loan at a 1.3% interest rate for 30 years, the interest starts off the highest at 541 and gradually drops lower and lower with every repayment. Note that the total sum of the repayment you make every month is still the same. It's just that the interest expense is highest at the start of the loan. And every single time you refinance, you reset this clock. Talking about choosing the best package for you, you need to know that you should never take interest rates at face value. Why? Because there are so many different types of interest rates. For example, first, fixed or floating rate. You have different kind of pegs, such as the SIBOR, the swap offer rate, SOR, the fixed deposit rate, or a bank's board rate. These different pegs work differently for every borrower depending on their needs and wants. Then there's also the spread, which is the margin the bank charges on top of its peg. Is it better to take a 1-month SIBOR pegged rate with a larger spread or a 3-month SIBOR pegged rate with a lower spread? Finally, there are different formulas for calculating rebates and incentives. Are you sure that you're getting the best deal out there and you have made the proper calculations and the proper assessments if a certain rate is suitable for you without just looking at the interest rate face value? Taking all this into account, what may on the surface look like the most attractive base rate might not in fact be the best rate for you that gives you the maximum amount of net savings. This is where I come to my last point, and you might want to consider working with a professional for your mortgage needs. Yes, me. 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 In fact, this sector has been one of the fastest growing sectors within the real estate market, with numerous new companies popping up all the time doing mortgage advisory. Why? Because number one, it saves you time. Instead of personally checking out the rates of every single bank, the mortgage professional has access to all the financial institutes of Singapore and are able to present to you the rates at a glance and share with you which are the best on the market at that point of time. The second, it saves you brain power. Instead of thinking what's more suitable for you, doing the math on what's the best, the mortgage professional will also give you recommendations on what works best for you. Third reason, leverage. As brokers, we deal with the financial institutions very often, forming strong relationships with them. This helps us to expedite matters when required, and sometimes we are able to also provide you first-hand inside knowledge before it comes onto the market. Most of all, this service is free and it doesn't cost you a single cent at all. Refinancing is just the tip of an iceberg. A good professional can also advise you on other matters such as equity loan, also known as the cash out refinancing, or come up with creative solutions to help you increase your loan amount. Might come in handy, especially for very complicated cases. With that, I come to the end of this video. If you have any further questions, please feel free to leave me a comment in the comment section below. Once again, I'm Jim Tay. Make sure before you go, give me a thumbs up, share this video with somebody who you think might find it useful. Hit the subscribe button, watch my next video, and I'll see you next time.